What's going on, YouTube? It's your boy Andrew, the Frugal Crab, back here with another video. We're talking about a trade that's possibly coming up here in the near future on Delta. So, of course, guys, I'm going to go ahead and go through the double dip strategy and show you guys exactly how I would employ it on this trade. I have been researching Delta for quite some time. I actually almost made a trade on it maybe a month ago, roughly, and I'll show you exactly what I was looking at that time. So, of course, if you're going to make this trade, guys, you need to make this trade now. I'd probably give it maybe 1 or 2 days, but you don't have much time. So make sure to hit that subscribe and like button. If you guys do like these videos and like the information that I'm sharing, or would like me to cover another stock, or have any other questions or any other videos, please let me know. Again, these videos are for entertainment purposes only. I am not a stock trader. I am not a financial advisor. And again, guys, I just want to help people see the potential behind trading options. So with that being said, let's go ahead and get started on this video, okay? All right, so here we're on the Robinhood screen and we're looking at Delta. So right now you guys can see we have Delta. It's trading at $36 a share. Again, guys, I prefer to use Robinhood when I'm researching my options. One reason why I prefer it is it's very easy and straightforward. Also, I like the colors. I know that's kind of being um, a small thing to pick a platform over, but it's very easy to use, very user friendly. So with this being said, we have Delta here at $36 a share. Obviously, this video is being recorded on a Sunday. Markets open again on Monday. Again, we have markets that trade 24 hours and early and late hours as well. So with that being said, guys, I'm just going to pull up these prices. As you can see, there was a big price drop right here, all the way from August, where Delta was at 43, and it's traded all the way down to at the point where I was considering a trade, which was $30, $31 a share. So of course, we're going to go look at the advanced tab on here, guys. When you're employing the double dip method, double dip strategy, what you're doing is you're looking for a price point that you're comfortable getting into the stock. So like I said, for me, with Delta, my preferred price point to get in at was at 30 to 31 to $32 a share. Unfortunately, I couldn't make the trade because I was making other trades. I believe at that time I was trading Dick's Sporting Goods, Target, Amazon, and some other ones. So I unfortunately just didn't have the capital to do Dick's Sporting Goods as well. So what we're going to look at, guys, is we're going to look at the 10-day moving average and the 50-day moving average. You see this very steady decline right here. That's a good sign because it's very steady and consistent. So, of course, again, if you were researching the stock and you wanted to make a purchase for it at some point in time, that's a good thing to look at. At some point in time, you'll see uh, the 10-day moving average level out, which is about right here at this point. That's why I said my purchase point was at 30, 31, 32. Another thing that I always look at is this RSI. So if you guys look down here at the chart, you can see for a very long time, the RSI is underneath 30. So really, basically what it's saying is that the stock is oversold. So it had been oversold for quite some time. Again, you know, with the whole bug that happened not too long ago, back in 2020, and everything that airlines have been going through over the last couple of years, they're not exactly a hot commodity. They're not a stock that most individuals are trying to trade or purchase. There's not really much price movement up or down. But again, with the most recent earnings call that Delta had, they actually had a very good earnings report. Their next earnings report actually comes out in January, January 12th, 2024 to be exact. So in that situation, as you guys all know or have heard me say in some of my previous videos, when you have an earnings report getting ready to come up, your options premiums are actually going to be more expensive. Okay. So what we're looking at here, as I said, you guys can see the steady decline. But another thing is that we always look for this intersection or cross point between the 10-day moving average and the 50-day moving average. So as you guys can see right here, this is November 21st is where they cross. So typically when that happens, there's about to be a major price change. So that price change typically could be up in this scenario, or it could be down. So I'm going to show you another chart just so you can have an idea. So here for the 1 month, again, you guys can see this is back on November 2nd. There was an inflection point or a crossing. And as you can see, we have a steady increase, very steady, where we're at this point where it's $36, $35 a share. And again, this is over 1 month, right? Now, if we take a look at the 1 year, you can see a more consistent flow, ebbs and flows in the chart, which is typically what I look at 1 year. If I want to look at, say, what is the lowest that Delta's been over 5 years or whatnot, 10 years, whatever it may be, that's typically when I want to see what is the lowest that it's been. So I'll click on the 5 year. I'll change this to candlesticks. And as you can see, the lowest that Delta was back in 2020, and we all know what happened in 2020. So we're going to just disregard anything that involved pretty much 2020 all the way to 2021. Somewhere in that area is where we're going to disregard it. So as you can see, the low for Delta before 2020 was typically around, as you can see, $45 to $50 a share. And then, of course, after 2021, we're looking at it somewhere between the 30 to the lowest being roughly about 28, right? So that's why I said the 30 was a perfect point to get in. Do I think you can still make a profit getting in at 35 or 36? Absolutely, because if you look at here, this is almost like another midpoint, or if the stock was getting ready to retrace a completely new chart, okay? So right here, we're looking at 34, 35. So that's why I said if you want to get in on this trade, I would get in on the trade now. Now, the highest, again, just looking at outside of those crazy years, 50, 51 upside. But again, it could always go a little bit higher, 62. So there's a little bit of room to play with, right? All right, so let's go back to the 1 year. So like I said, whenever these cross, there's typically a major price change. So whenever the 10-day is above the 50-day right here and they cross, typically it's going to be a price down, as you can see right here. And then if you see right here, they're getting ready to cross again, typically that's going to mean a price up. As you can see, this very large shoot up in the price. Again, we're right here crossing and it's a price down. And then guess what we're coming at to? Another crossing point. So that means likely a price up, right? Now, if we look at the charts and we try to compare them, this section right here looks very similar to this section, right? So as you can see, there was this dip somewhere around 32, $30 a share, just like we talked about maybe a month ago. It kind of leveled out a little bit, and then there's that cross. Same price point almost, maybe plus or minus one or $2. And then it shot up, and it shot up all the way up to 48. So again, earnings for Delta is going to be in January. So right now, this video is being recorded towards the end of November. So that means there's a likely possibility that this is going to shoot up. Maybe it shoots up $5, maybe it shoots up $10. It really depends on the earnings, but a lot of stocks currently have been reporting better than expected earnings. So you guys got to remember that during 2020 and 2021, that all earnings were essentially elevated due to the stimulus money that was printed. So of course, we're really just coming back down to norm. So it's nothing out of the ordinary if any of the stocks report maybe 10 cents or $1 less than what was expected. All right, so let's go to the options chain. Let's go take a look at that. All right, so if we go back to trading Delta, like I said, if we were to get in and purchase it right at the $36 mark, basically we'd purchase it at 36. This is how the double dip method works. So you purchase it at 36. So that means you bought, let's just say you bought, I don't know, 200 shares. Let's say you bought 200 shares. Let's say 200 shares. So that means you paid $7,214, right? So that means now you have technically 2 contracts to work with in terms of a call. So we'll go to trade options. So again, we're going to look at somewhere around 30 days to start off with. So as you can see, for 30 days, if you buy it at 36, if you sell a call, you could get 56. Yeah, you could get $56, and that's very doable. That's very doable. If you look at the Delta, Delta says 0.31. I typically, if it's a stock I don't want to lose or I don't want to have a put aside, I'll look for something that's 0.23 and lower on the Delta. The Theta is 0.018. So not too bad, but pretty significant. So if you go a little bit higher, you can see this not very attractive because, like I said, guys, on this channel we're really looking at income. So we're really sniping for premiums, is what I like to call. So all we're doing is looking for premiums. So if we go down to the put, same thing, because we're typically, when we're employing this method, we're looking to apply it at the same date and time frame. Nothing too attractive. So let's go closer towards the earnings date. Now, we don't want to go past the earnings date. We want to go before. Now, you can do it past, but then you just have to understand that you'll probably have to close your call or your put early so that you can take advantage of some of those premiums. So if we come to the 5th, you can see that these premiums have pretty much, almost the same, nothing too crazy. The calls, same thing. They're a little bit more expensive, but nothing too great. And if we go to the 19th, you see a gigantic jump. So again, if you were comfortable selling it at 38, which, like I said, with a 0.38 delta, you're almost getting close to a coin flip that it very well will happen. But even if you did that, and let's just say you did 2 of those, that'd be $221 in your pocket today. And then, of course, when we do the double dip method, we're going to look for a put as well. Let's say, like I said, the lowest that Delta had been trading at was somewhere around $30 to 31. It has a 0.11, which means it's highly unlikely to happen. But again, even if it did happen, whenever you're doing the double dip method, you just got to make sure that it's a stock that you don't mind owning if that put were to be assigned, right? But when we do the double dip method, it's really 100% guarantee that you're going to come out ahead on the trade. And again, I'm going to explain to you how that works. So let's just say for the same time frame, whether that's before, let's just see what the premiums are before. Yeah, nothing super great, right? So we'll come back to here. Okay, so let's just say you really just want a higher premium, and let's just say you're confident it's not going to go below 42. You would then also do a put for that, which that could be 2 or it could be 1, whatever, however many number of contracts you want to do. But let's just say you did 2 contracts there, so then that means basically you get $91 from that one, and then I believe it was 222 is what we were looking at when we sold the call. I think that was at the 38 strike point, right? Yeah. Selling 221. So you basically make about $300 off of that trade initially. But then again, guys, the way the double dip works is that a stock can only go up or down. It's the best way to look at it is you have 2 sides of a coin. You have heads and you have tails, right? So typically when you flip a coin, one person wins and one person loses, right? With the double dip method, is it possible that you could win on both sides of the trade no matter what? And that's why you can, if you're employing the double dip method. If the stock were to go up, for example, and it goes up on the call side, like let's just say it shoots all the way up to $41 a share and it goes past your strike point of 38, well, guess what, guys? Your put is actually going to become worthless, and that's when you can buy the put back for pennies on the dollar, right? So then after you buy the put back, the only thing you have is your call and the upside from when Delta went up in price, right? Okay, well, what about if it goes the opposite direction and it goes down, and your strike point for your put is, let's say, again, it was $31 a share, right? And let's just say it doesn't hit it, but let's just say it gets pretty close. Well, guess what? Your call is going to be worthless. You close your call early, and then you're out of that trade, right? Now, the next thing is you may ask, well, hey, Andrew, I bought 100, 200 shares at $36 a share, and now the stock is trading at 32, 33. Yeah, and that's natural. You got to understand that when trading stocks, as we showed you in the charts, the technicals, right? The stock is going to go up and it's going to go down, right? It's going to ebb and it's going to flow, right? What you don't want to do if you're employing the strat, you don't want to purchase it on the high end, right? If you purchase it on the high end, that means you're just likely stuck in the trade for a little bit longer than you normally would be. But again, if you look at this trade, it's no more than 2 months, right? That would mean you'd be holding Delta for no more than 2 months likely. If for whatever reason it did go down, that's another opportunity for you to dollar cost average down. if you did dollar cost average down, and it's a stock you want to hold, whether that's Delta, Amazon, Apple, the common FANG stocks. At this point in time, this is when you could either employ the double dip strategy again, purchase shares at $30 if that's where it's at, or 31, and do the same thing, sell calls, because you got to remember when it went down, you purchased your calls back, right? So that means if it went down, that means now you're able to sell calls again and collect the income, which is not a bad deal, right? Because what we're concerned about is income. Now, even if it did get called away from you on the upside, you still get a little bit of appreciation in addition to the premiums that you sold. So, like I said, guys, right now, Delta is the one that I'm looking at coming up here in the near future. So like I said, when we get to the options chain closer towards January, those premiums are actually going to be a lot higher. So if you do decide to go this route, and like I said, if you wait till it gets closer to January 19th, or you wait for a big upside, you could sell a call at that point in time. These premiums right here will more than likely triple when we get closer to earnings. And so when I say they will more than likely triple, so typically if Delta is still trading at 36, and there's a positive upbeat that they're going to beat earnings or have a good report, this premium could easily turn into $5.79, or this could easily turn into $3.11. That means you're going to make triple the amount of money in a short period of time, right? And again, guys, we're not holding these stocks indefinitely. Now, I have some stocks that I hold for a long period of time, so it doesn't matter whether they go up or down. I have no intentions of selling them. AT&T is one of those stocks. Verizon is another one. I just love dividends. So that's one reason why I said if you pick a stock that you don't mind owning, which Delta is one of those, you pick a price point that makes sense. Like I said last month, towards the end of October, it was around that 30 to 32 strike point. And if I had done that or went with that trade instead of some of the other ones, which I'm not complaining about, basically I would have owned the stock probably around $31 at an average cost. And then we would have gotten to this point. And even if you just wanted to get out of the trade, this is the power of the double dip method. Even if you just wanted to get out of the trade, if you had bought it at 31 and it's trading at 36, well, look at here, guys. You could go ahead and sell a call and go ahead and collect $325 in premium for just one contract, right? Well, what's wrong? What's wrong with that? Again, the whole point of this channel is to show you of how you can increase your income. I know it's around the holidays, and if you just needed $100 to help pay for some presents, guys, for your family or wife, girlfriend, boyfriend, whatever, you just do a small little call like that. You let your shares get called away. Like I said, if I had bought two and we're doing the same thing and you had bought it at 30, well, guys, guess what? You're going to collect $649 in premium. $649 in premium. That's good money if you need to buy presents for a significant other. In addition to that, if you bought it at 30, you're also getting the appreciation when the shares sell at 34. So you're still making a little bit more money. You're making almost an extra $400 as well, $800 actually to be exact, on the contracts, because again, you bought it at 30, which is going to be 3,000. You're selling at 3,400 times two. That's an extra $800, guys. So then 800 plus 600. How is that not bad income? That's my point about options. You can make a good amount of money on the side, trading very little stocks, doing very little effort. You don't have to be a millionaire trading options, but you can definitely make some decent income. And like I said, these premiums around earnings time, this is typically how I trade around earnings. This may not even be $3.25. This might be $8.25. So that's why I said this number could be almost quadrupled, once you get closer to earnings. And that means you'd make, maybe two, three, $4,000 off of one covered call that you sell at that point in time. So guys, like I said, if you like these videos or if you want me to cover another stock, just let me know. Please hit that like and subscribe button. I do appreciate you guys watching this video. Again, this is something that I do enjoy doing. Just want to share this with as many people as possible. And like I said, my recommendation, is Delta. I'll continue to review other stocks. Sometimes I can post the video ahead of time. Sometimes I can't, and I have to do a video after the trade has been made. But typically, you don't have very much time to kind of think these things over. You need to, take a quick look, make your decision fast, and then get prepared for the trading week. There's times where if you wait too long, there could be a major price change and you might not be able to make a very profitable trade. So, like I said, in the situation with Delta, if you guys decide that you want to make that trade and you wait, and Delta, for whatever reason, does, as you can see, this big price movement from 31 down at November 1st over almost 30 days. If you see Delta and it ticks all the way up to 40, well, you kind of have a problem, because now you're going to be at a situation where you're sitting at the higher end of the band, right? And when I say the higher end, which means you're at the higher end of the RSI, and that means now you're at a situation where you're paying more than what you should be paying for the stock. What you don't want to do is you don't want to be in this situation right here. As you can see, the 50-day is actually above the 10-day. You don't want to be in a situation where you decide I'm going to buy Delta at 45, and then now you're looking at your shares drop, 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 drop. There's not much you can do in terms of options that you could trade at that point in time. Okay. All right, guys. Well, like I said, I appreciate it, and I'll be putting out hopefully another video later today as well as tomorrow. Again, just trying to help as many people as possible. So I appreciate it. And again, I'll see you next time.